Let's talk about the flashing red number you're looking at right now, 11. For the crypto markets on July 1st, 2026, that number is practically blaring like a siren. It means the fear and greed index just hit a brutal, fresh cycle low. Yeah, we are officially staring down a state of extreme fear.
So, welcome to The Explainer. Today we're diving into the sheer chaos of July 1st. And honestly, we're treating it like a high-stakes anime-style clash. Seriously, the market right now is playing out in vibrant comic colors, full of crumbling giants, massive corporate invasions, a heavy regulatory iron fist, and, well, a few resilient heroes fighting back. It's wild. Let's jump right into the storm.
Act 1. The storm. The crash.
Okay, so the market is just bleeding out right now. We've been slammed by heavy macroeconomic forces. Think heating inflation data and this massive AI chip rout. And it just shoved Bitcoin down to a brutal intraday low of $57,800.19. And if you look at these ETF outflows, you can literally see the weight of the institutional pressure. See that massive first bar? That's BlackRock's IBIT shedding $212 million in a single day. 9 consecutive days of withdrawals, guys. The big institutional money is absolutely pulling back its troops.
And it definitely gets more intense. The technical outlook here is heavily bearish. Bitcoin is right now testing its 200-week moving average. So what this means is that this $58,000 zone is essentially the ultimate defense line for our wounded giant. If that level breaks, analysts are warning the floor could fall straight out, opening a path right down to the 55,000 range.
Act 2. The Invaders. The Stablecoin War.
Picture a fighting game versus screen for a second. On the left side, we have the reigning champion, Circle, with its USDC stablecoin. We're talking $73.7 billion in circulation and years of a regulatory head start. But on the right, the challengers, Visa, Mastercard, and Stripe. A massive alliance from traditional finance has officially invaded Web3 territory. And this TradFi consortium is a total existential threat because they completely bypass Circle's biggest advantage. They don't need to build adoption. They already own the global distribution and payment rails. They can basically just flip a switch to their billions of users.
Which brings us to this, and it brilliantly illustrates exactly why Circle is so terrified right now. Look at that massive slice of the pie. 96% of Circle's revenue comes directly from the interest they earn on the reserves backing USDC. They don't make their money on transaction fees. So if Visa and Mastercard steal market share and USDC circulation drops, Circle's core income takes a direct, devastating hit. And wow, the stock market fully understands this vulnerability. When this rival stablecoin launched on July 1st, shares of Circle Internet Group absolutely plummeted, dropping nearly 18%. This massive plunge broke down a critical technical triple-bottom support level. The market is basically pricing in the reality that Circle's moat might have just been breached.
The regulatory iron fist.
While the corporate titans battle it out, the landscape itself is shifting beneath their feet. Government bodies are dropping heavy compliance mandates, forcing this massive immediate sorting of the market into undisputed winners and, well, exiled losers. Grounding things in real-world authority for a second, look at this official directive from the European Securities and Markets Authority. July 1st marks the official end of the MiCA transitional period in the EU. The grace period is absolutely over.
And they are not messing around. Looking at these wind-down rules, unauthorized crypto asset service providers have to immediately wind down their EU activities. They must stop onboarding new clients, cease all marketing, and limit their services to just closing out positions. So the takeaway here is that this iron fist forces non-compliant players out, which directly benefits highly regulated compliant entities, like Circle's USDC, who actually played by the rules in Europe.
The regulatory squeeze is going global, too. Over in Australia, July 1st also brought the enforcement of a strict new travel rule. This requires full identity verification for all exchange withdrawals, with absolutely zero minimum threshold. The frictionless days of moving money without an identity check on major platforms, yeah, those are rapidly closing.
Act 3. The Resistance, Solana and the Outliers.
But listen, amidst all the crashing prices, the corporate wars, and the regulatory crackdowns, there are some survivors showing incredible strength. Even with Bitcoin dropping and the overall market drowning in extreme fear, Solana is standing out as this incredible underdog. It actually gained over 8% on the weekly chart. So, while the broader market dip and weakening on-chain fundamentals have dragged almost everyone else down, Solana is stubbornly holding the line.
So, why the strength? Well, it's all about anticipation.
Look at this timeline. Solana had a rough cooldown after its peaks earlier this year and late last year, but right now, the entire ecosystem is laser-focused on Q3 2026 for the targeted launch of the Alpenglow Consensus upgrade. This upgrade is the technological catalyst that's driving its current survival.
And honestly, this speed comparison shows you exactly why the market cares so much about Alpenglow. We're talking about reducing transaction finality from a somewhat sluggish 12.8 seconds down to a blistering 150 milliseconds. That is a massive, game-changing technical leap. And this sheer scale of improvement is exactly why institutional and retail money are willing to bet on Solana right now, completely defying the broader market gravity.
Actually, Solana isn't the only one finding alpha right now. Specific altcoins surged purely on the back of strong institutional news. Stellar rocketed up 12% following reports of an integration with the DTCC for settlement, and Pyth jumped 6% after securing a major data distribution deal with Nasdaq. Turns out, real utility and institutional partnerships can absolutely cut through the fear.
Hacks, scams, and supply chains. Before we wrap up, though, a final warning. While the heroes are fighting the good fight, villains are still exploiting the chaos. The ecosystem is dealing with some very serious security threats. Just look at the alerts from July 1st alone. We saw a sophisticated supply chain attack targeting DeFi developers using fake trading bot codes on NPM. And on the justice front, the CEO of Goliath Ventures just pleaded guilty to a staggering $250 million crypto Ponzi scheme. So yes, the ecosystem is actively purging these bad actors, but they are still a very real danger that you need to be aware of.
So, as we look at the wreckage and the resilience of July 1st, 2026, we are left with a massive cliffhanger. With TradFi giants launching an all-out stablecoin war, the regulatory iron fist slamming down globally, and Bitcoin teetering on a critical technical edge, who is actually going to survive this crypto winter? It's a high-stakes battle of attrition, and the next few moves will dictate the future of the entire industry. Keep your eyes on the data and stay focused.